Good day, everyone. I'm here to discuss about understanding variables that should be considered when selecting mutual funds for investment purposes. Selecting mutual funds requires understanding several key variables to align your investment with your financial goals and risk tolerance. These variables interact so as a holistic approach is crucial. Number one, investment objective. Growth focuses on capital appreciation suitable for long-term investors with high risk tolerance. Look for funds with higher historical growths, but understand this implies higher volatility. Income prioritizes regular dividend or interest payments suitable for investors seeking steady income streams. Considers funds focused on bonds or dividend-paying stocks. Next is balance. Aims for a mix of growth and income balancing risk and return. These funds typically hold a mix of stocks and bonds. Number two is risk tolerance. Conservative. Low risk, lower potential returns. Suitable for risk averse investors nearing retirement or with short term goals. Consider bond funds or funds with lower expense ratios and lower volatility. Next is moderate. Balances risk and return, suitable for investors with a medium term horizon. Balanced funds or funds with a mix of stocks and bonds is appropriate. Next is aggressive. Higher risk, higher potential returns. Suitable for long-term investors comfortable with market fluctuation. Consider funds focusing on growth stocks, emerging on growth market or small cap stocks. Number three, fund type. Stock funds invest primarily in company stocks, offering higher growth potential but also higher volatility. Subcategories include large cap, mid cap, small cap, growth, value, international, and emerging market. Bond funds invest in funds providing relatively stable income and lower risk than the stocks funds. Subcategories include government funds, corporate bonds, high-yield bonds, and municipal bonds. Balance funds hold a mix of stocks and bonds, aiming for a balance between growth and income. Last is money market funds. Invest in a short-term low-risk securities offering safety and liquidity. Number four, expense ratio. The annual fee charged the fund to cover operating expenses. Lower expense ratios are generally better. Compare expense ratios across similar funds.
Is the fund manager. A fund manager is the person or team who decides where the fund money goes. Their skills and experience can affect how the fund performs. Example: if a fund manager has a 20 years track record of growing funds by 10% annually, investing in their fund may give you better chances. Like if you invested 100,000 pesos and it grow by 10% if per year under a good fund manager in 5 years, it could become around 161,000 pesos. Investment horizon. How long you plan to keep your money invested. Longer periods like 10 years can handle more risk, while shorter periods need safer choices. Example: if you plan to invest for 20 years for your child's college fund, you could invest in riskier funds like equity funds. But if you need the money in 2 years for a down payment on a house, you may prefer safer bond funds. Portfolio diversification. When we say portfolio diversification means spreading your money across different types of funds and countries to lower risks. Example, you might put 50,000 pesos in a Philippine equity fund and 30,000 pesos in a bond fund and 20,000 pesos in a global equity fund. This way, if one part of your portfolio performs poorly, the other can help balance it out. Tax implicity. The type of account affects how tax you pay on your investment gains. Example, if you sell your mutual fund in a regular brokerage account, you may pay capital gains tax, usually 15% in the Philippines. But if you hold it in PERA or personal equity and retirement account, your earnings may grow tax-free if you follow the rules. Minimum investment. Some funds requires a minimum amount of money to invest. Example, a certain mutual fund might have a minimum investment of 10,000 pesos. So you need at least that amount to buy into the fund. The last one is past performance. Looking at how the fund has performed in the past helps you understand and track record, but it's not a guarantee for the future. Example, a mutual fund that has given an average return of 8% per year for the past 5 years look promising, but you still need to check if it matches your risk level.
Today, I would like to share my report on difference in retirement plan. In this report, I will discuss the objective of the topic including the advantage and disadvantage of retirement plan. Retirement plans vary significantly and restructure, contribution limits, tax advantage, and investment option. Understanding these differences is crucial for choosing a plan that best aligns with your individual financial goals and circumstances. Below is a comparison of some common retirement plans. First, define benefit pension plans. Objective, to provide a guaranteed monthly income stream upon retirement based on years of service and financial salary. Advantage, simplicity, guaranteed income, inflation protection in many cases. Disadvantage, less common now, limited portability if you change jobs. Benefit or fixed regardless of investment performance. Second, define contribution plans. Objective, to accumulate savings for retirement through employee or employer contributions. Advantage, stock deferred growth, employer matching contributions, flexibility in investment choices, portability. Disadvantage, investment risks, rest solely with the employee. Balances are subject to market fluctuations. Third, individual retirement accounts. Objective, to provide a tax advantage way to save a retirement. Advantage, tax reduction for traditional ERS, tax-free growth and withdrawals, flexibility in investment choices. Disadvantage, contribution limits, income limitation for some types of IRAS, penalties for early withdrawals. Fourth, annuities. Objective, to provide a guaranteed income stream either immediately or a future date. Advantage, guaranteed income, potential for tax-deferred growth, may offer protection against longevity risks. Disadvantage, can be complex, fees can be high, liquidity may be limited. Social security. Objective, to provide a safety net for retirees, disabled individuals, and surviving family members. Advantage, provides a basic level of income in retirement. Disadvantage, benefit may not be sufficient to cover all living expenses. Benefit amount depends on earning history and age for retirement.
Good afternoon everyone. I'm going to discuss about estimating your future retirement fund needs. Financial security. Accurate estimation ensures you have enough money to maintain your desired lifestyle during retirement. Planning and goal setting. Retirement fund estimation help you set realistic savings goals and develop a comprehensive financial plan. Can include steps like adjusting spending habits, increasing income, or choosing appropriate investment strategies. Stress reduction. Knowing your own track to meet your retirement goals reduce financial stress and anxiety. This allows you to enjoy your life more fully both before and during retirement. Informed decision making. Accurate estimating enable to you make informed decision about your career, investment, and retirement timing. You can determine if you need to work longer, save more aggressively, or adjusting your retirement expectation. And then legacy planning. Knowing your retirement needs help you plan for your legacy, ensuring you can leave an inheritance for family member if desired. In a short, estimating retirement fund needs is not simply a financial exercise. It's a crucial step in securing your future well-being and peace of mind. The earlier you start, the better prepared you.
My topic for today is preparing a will and the other documents to protect you and your assets. Here are the objectives: to ensure your assets are distributed accordingly to your wishes, and to minimize potential legal dispute and financial burden to your loved ones after your passing. What is will essential? Will essential, o mas kilala bilang last will and testament, is gimbubuligan ito sa mga tawo para mahi-distribute it iya ari-arian accordingly it iya wishes, para maiwasan na din it pagkakagulo ito sa na pamilya. Here are some importance of will essential. Number 1 is control over your assets. From the word control, ginaalaw kahit will pagdesisyon kung hino it imo mga tatagan o igaapi hit tatagan hit imo assets o igaapi hit imo will. Kung waray ka last will and testament, diri pwede pag-agragawan hit imo pamilya iton imo mga ari-arian. Number 2 is guardianship for minors. Kung may mga anak ka na mga minor, tapos maghihimo ka hin will, ginaalaw ito ni will na pumili hit mag-aalagit imo mga anak, sugad man hiton imo mga ari-arian. Number 3 is minimize family dispute. It last will and testament helps you and your family member na diri mag-away-away, and it assures you na equally mahididistribute it imo mga assets. Number 4 is reduce private and cost time. It private daw amit legal process at pagbabalidate iton will. Gindi-distribute iton assets. It will gimpapasimple itong process para makasave in time, money, para hit imo mga tagapagmana. That's all. Thank you.
The next topic that we're going to discuss today is all about how trust are used in estate planning. But before we start our discussion, let me define first what is trust. When we say trust, it is versatile tools that used to help manage our asset and reduces our taxes, and of course by protecting our beneficiaries during after grantor's lifetime. They also offer flexible and control over asset and distribution, and by maximizing taxes to protect the beneficiaries. They can also provide a framework ensuring that the assets are handled according to the grantor's wishes, and of course, the beneficiaries can receive an appropriate support. Okay, let's move on to discussing the trust, and then let's move forward to discuss the uses of trust in the estate planning. The first step is asset management. This asset management is used in estate planning by allowing grantors to appoint trustees by managing the asset reserves for beneficiaries. Like for example, an individual that is lacking for financial experiences. That is an asset management. And now let's move on to the main topic, which is all about the common types of trust. This is the most important topic that we need to know because this provide frameworks when we say revocable trust. It is controlled by grantors during his or her life and is also used for asset management. When we say revocable trust, it is controlled by grantors his or her life and is also used for asset management and probate avoidance. This has general tools that can organize clients, bank accounts, and life insurance, and make sure that all clients' assets are kind of moving at the same time or immediate planning so that we need to use revocable trust and give us a lot of flexibility in a way to get things organized. But there are other reasons why trust, revocable trust are very important and